All right, welcome everyone. The topic that we're going to discuss today is volume price analysis. Actually, just a quick disclaimer before we get started. This is for educational purposes only. I am not registered or licensed to give investment advice. So make sure you are, if you're making any investment decisions, you talk to your investment advisor. Okay, so the agenda for today's meeting is understanding what volume is, first of all, and then we'll take a look at, now the question that often gets asked is, can volume be used to trade Forex? And so we'll look deeper into that, and then we'll go into how we use volume in three different market conditions. One is to during breakouts, how can we confirm that it's a true breakout using volume? And then second is how to confirm trends using volume. And finally, when we have market reversals, how do we actually confirm that it is a real reversal as opposed to a retracement? And those are the three market conditions that we'll go deeper into. Okay, the first question, or the first thing, is understanding what is volume. So volume is basically a measure of a given financial asset, how much of a given financial asset has been traded in a given period of time. So in layman terms, what that means is how much, how many transactions have come through, how much activity is going on in the market when a price move happens. Because there will be times when a price move happens when you have a lot of orders that come in, and other time price move happens when there's hardly any orders coming in. So we'll take a look at those. So when we have any market conditions, there is always a buyer and seller for a transaction to happen. If it's a market that's going up, then we have buyers there are more buyers in the market, and then there are sellers. And when it's a market that's moving down, that market shows that there are more sellers in the market than there are buyers. So when the market is going up, we should see rising green volume or buying volume, and when the market is going down, we should see decreasing green volume or buying volume and increasing red volume, which is the selling volume. So that's the main concept here. When the market's going up, we're looking for buying volume to come into the market. When the market's price is going down, we're looking for red volume or selling volume to come into the market. So is the Forex volume reliable? So this is a question that comes up often anytime I've done any kind of video on volume. A lot of times I get a question, is this real volume? The reason this question is asked, first of all, is because there's no central exchange when we're trading Forex. In other markets, I should say, or in other asset classes, if you're trading stocks or futures, options, any of these, we are actually able to see real volume because there is a central exchange and all the transactions have to go through a central exchange. So we know exactly how many buy orders have come in, how many sell orders have come in, and we can get the true volume. And secondly, in the Forex arena, we are looking at our platform volume, or we're looking at volume from our broker. So the question is that a real volume? If you're not looking for volume of the overall market, we're only looking at volume of each broker. So in order to get past that, what we look at is tick volume, right? So the tick volume, it measures the number of times the price ticks up and down. So we're not looking at the overall volume in the entire market. We're just looking at the number of times the price ticks up and down. And normally when you take a look at your platform, doesn't matter what broker you are with, you will see that the price is the same regardless. So every time price moves up in one broker platform, you'll see price has gone up in all the broker platforms. So there is always that correlation between one broker and the market, where if the price, so you won't see where, let's say FXCM, the price has gone up, and with another broker, the price has gone down. So we are not actually, when we see price, we see the same price across all the different brokers, all the different platforms. So in the same way, we are looking at tick volume here. We are looking at tick volume as a proxy for the real volume traded across the entire market. So tick volume is usually a good indicator of the strength of activity in any given bar. So tick volume is measured in each individual bar. So, and there's a big correlation between tick volume and actual volume that is traded. Oh, sorry. Okay, there was so there is, or there was a study that was done by Casper Marney, who's head of Marney Capital, and he's also ex-UBS and HSBC trader. So he did an analysis on actual volume and tick volume in Forex, and he used data from multiple data providers, eSignal, EBS, and Hotspot. And what he found was that there was a correlation of 90% between tick volume and actual volume. So what that means for us is that we can actually use the volume that we see in our charts as a proxy for real volume. So we don't actually need to go hunt down the real volume in Forex, because there isn't one. So we can just base our analysis on tick volume. So we don't need to get caught up in the debate whether there is, true volume or not. We can just use what we have available as a basis for our trading and actually make better trading decisions based on that. So let's take a look at that. So the first thing that we had talked about was looking at market ranges and breakouts, and using volume to confirm our breakouts or stay out of a false breakout. So first of all, what is a breakout? So a breakout refers to a range-bound market, or it's also called the sideways trend. So also referred to as consolidation. So when we have a range-bound market, what we notice is that price will go between the top, which would be our resistance line, and support in the bottom. So you'll have price go up and down between a range between the top and the bottom, and the price is not able to break out of this. However, the ranges don't last forever. At some point, price has to break out. And this is the time when we have a good market opportunity to actually take advantage of this price breakout. So a range breakout occurs when price is able to break above or below a price level that the price previously was not able to break above or below. So in this case, if we see the price break above our resistance line here, so that will be a bullish break. And if we saw the price come down and break below this green line, below our support line, that would be a bearish breakout. So what is a false breakout? False breakout is when the price appears to break higher or lower, and then turns around. So this is called the false breakout. So in case of our example here, if price does one of these, for example, price breaks down here and then goes back up, we see this a lot. So price will break down and it will look like price is going to go lower, but then price quickly turns around and goes up. So there are a lot of traders who will trade the price breakouts. Once the price closes below this level, they will take a short entry. They're looking for price to go this way, to go lower. However, price just quickly pulls back in and we're back in the range again, and they end up with losing trades. So same way, if the price goes through this level, for example, then breaks through and comes back in, that will be a false bullish breakout, because here price broke out and it gave the sense, it looked like it was going to keep on going up. And this was, price looked at one point, price would have looked very, very bullish. And some people will actually take a trade as the price breaks through here. And next thing you know, you're caught up in a false breakout and the price comes back and starts trading within the range. So this is a big problem when we are trading breakouts. So what do we do about it? How can we use volume to confirm whether this is a false breakout or a real breakout? So important thing to remember with the breakout is that if there's a rise in volume, it will indicate strength in the move. However, if there's no rise in volume or the volume decreases when a breakout is occurring, that will be a false breakout. We just covered that. So what we're looking for here, for example, this is a chart that I found. This is not my chart, but it was a good example, so I thought I would share this. So what we have here is a range. So if you look at here, this is US dollar, Japanese yen, and this is from FXCM. So which is one of the brokers. So here we have price is capped at 102.70 and in the bottom 101.22. So price is moving at this point between these two levels. So every time price goes up here, we see price come down, and then every time price goes here, price goes back in. So in terms of false breakout, so this is a false breakout. At one point, this would have looked like price was going to go through, but then pulled back in again. And here as well, this is this blue candle here is a false breakout as well. Every time the price, or this time the price tried to break through to the bottom, but then came back in and closed back into the range. And here the price goes up, stays within the range, price goes down, stays within the range. And here we see another false breakout attempt where the price comes to the support level here, but then turns around and goes back up. And here as well, price tries to come down and then goes back up again. This again here is a false breakout. We see that the very, very bullish candle and closes above our support and resistance line here. And then we have 3 times that the price is trying to close or stay above the resistance line here, but then eventually we see the price come back and actually close within the range. So if somebody took a trade here going long, they would have lost that trade because price didn't actually follow through. It just came back and closed back in. So so let's take a look at the volume in this example. So here we see that volume here, we see price is trying to break to the downside here, but the volume is really low. So there's this volume, this big volume here, but then the volume goes back in. So there's no direct correlation. We want to see when price tries to break out, we want to see large volume. And actually I'll share my charts here with you, and because the volume that I have is green and red volume. So green volume is the buying volume and red volume is the selling volume. So we'll take a look at actual platform here. This is just for example. So in this case here as well, we see really, really low volume. So high volume is this, when there's a lot of activity going on. Low volume is there where the price appears that it's pushing higher or lower in this case, but there's only one bar of high volume and the rest of the bars are really, really small. So this just shows, so this is a fake out volume. Anytime you see just one single bar, but no follow through, so the rest of the bars are small, that is not a good time to take a trade. In this case here as well, we see one bar that is big and then the rest are small. So there's no real rising volume. So when price is going up, we want to see volume going up here as well. Whereas right here, we just see small levels of volume, not real follow through. And those are the times when you do not want to trade a range breakout. So now in this example for this particular place right here, what we have is the candle has closed outside of our range. So that's one criteria that we look for, the candle to close outside of the range. Here we had the price had tried to go back up, but the candle actually closed right on top of our resistance level here, did not manage to close above the resistance level. Same thing here, all three candles here have not closed within our range. So, or they have not closed outside our range. So here we have the first candle that has actually managed to close outside the range. And what we see here correspondingly, we see high volume. So the next few candles are high volume as well. So that's what we're looking for, a follow through in that. So the first thing you would look for when trading a breakout would be actual candle close outside the range, and then the second would be a follow through with the volume as well. So you want to see not the little volume here, you want to see an increased amount of volume coming into the market, which will suggest that it's going to follow through. And same here as well. So this is the outside range here, and price retraces here. As you can see, the volume is coming down right here. So this is our retracement, and then you see another huge bar that suggests more buying volume has come in. So this is a correlation between volume and actual breakout, whereas if it was a false breakout, we would just see something like this, where we see low amounts of volume, no real follow through on volume. So let's take so again, we are looking for a price to close beyond the range, and then it needs to coincide with large amount of volume. So let's take a look at an example here. Let's go to the charts. So here are these, this is my chart. This is what I normally trade. So let's take a look at the price action here. So what we're trying to use is using price action and then using volume to confirm that our price what the price action is saying. So if the price is moving down, for example, right here, see how the price is making, so we have a high here and then we have a low. So the price is making, actually maybe I should, so the price is making lower highs and lower lows. So we see the price coming down and the volume is increasing. I'll speak a little bit more about that in the next section here. So looking at just the range bound market here, this is a range bound market right here. Let me see if I can even find a better, yeah, so this is a range bound market. Let me just get rid of, oops, okay. Okay, so let's take a look at a range. So here we see, and this is a daily chart, pound US dollar daily chart. So this is a number of days, and that's why this is a good one to look at. So here we have a range bound market. We have price, this is the upper level, this is the resistance area, and this is the support area. So if you take a look here, price is moving up, and this is the volume indicator in the bottom. So if you see here, as the price moves up, we have green volume that comes in. So this is a buying volume. This confirms that there are buyers in the market. And then we see price starts to pull back a little bit, but we still see green volume. So as long as you're seeing green volume in the market and the price is moving up, so we're looking for disparity between really price and volume. If there's no disparity, that means you know, it's good to go in that particular direction. If we see green volume come in here and the price is moving up, that's perfect. So we want to buy in under those market conditions. And if we see red volume, so if we take a look over here, so you have red volume here and the price is coming down, that means there's selling volume, which confirms the trend. So you want to make sure prices you know, you're staying with the trend, so you're selling into this. So anytime there's green volume and you see price moving up. So when you see red volume and price moves up, that means stay out of the market. If there's neutral volume, that means it could just be a pullback. But once you see green volume and the price goes up, that means the price that everything is coincides and the price will go up. So we're looking for similarities between price or coincidence between price and volume. So in terms of the range bound market, what we see here is that there is no real direction. So normally what we want to see is when price goes up, the volume needs to go up as well. And here we see that the volume, we see some red volume come in, but in terms of, see, if you look at the height here, the volume hasn't really moved anywhere. It's just gone sideways, so it goes up and down. There is green and red volume, which means there is buying and selling. But if you look at the actual, the bars, the height of these bars, it doesn't really go up very much. So there's not a lot of change here in terms of volume. So that shows that there's a range bound market. Anytime volume just goes up and down here and price is moving like this just confirms that the market is range bound. So in terms of a breakout, we would be looking for, so let's take a look here. So this was a range bound market here as well. Let's take a look at this example actually. This is a better breakout. So here we have range. The price has gone into this price level, and then this forms our support, and then we have resistance here, and the price just hits a wall. And then it drops, goes back up again. So this is a range-bound market here as well. And if you take a look at the volume in the bottom here, as price goes up, the volume is green. So that's good. Volume is green still. Then the price starts making very small candles, and the volume is not really going anywhere. It just stays constant. So at this point, we could expect a pullback, and we do get a pullback. We get the red volume, and then there's a red bar here. So we get a pullback, but then our green volume comes in, and we have a buying day. And then as you look at the top here, these very, very small candles, and look at the corresponding volume in the bottom. So see how the volume is white. That means it's neutral volume. So in this case, we don't have too much of buying volume or too much of selling volume, which will result in a price that goes sideways. So when you see that there is a nice bar, a nice move to the upside, followed by this kind of volume here, neutral volume, this usually is a good sign that the price is not going to go up. So if you have taken a trade and you are sitting in a profit in a trade, this is a good time to close your trade and take money off the table, or at least reduce your position, because now you know that the market is not willing to move higher. And then once you get your red volume here, if you take a look here, and you will see a nice pin bar close, then we see red volume start coming into the market, and then price comes and hits the bottom here, and then our volume starts to turn green again, and price starts to move up. And then once we get to the top of the range here, price is the volume is not really increasing, or even though one bar shows more volume here, the candle is red. So there's a disparity between volume and price. When there's disparity between volume and price, it's a good time to stay out of the market. This is just like the neutral market where we want to stay out. Once the price shows that the red volume has come in, we know that now the price is willing to move. So in terms of this daily chart, this is where we first see the red volume come in, and then you see a follow through, and then see how the volume decreases here. This bar has good volume, this bar has good volume, and then the volume tapers off here. This usually means there is a pullback, and we see a pullback. And then finally, we see the price break out of this range, and it actually stays out. So this is next time the price. So we did see price volume went up with the price dropping. So that's good. So that means everything is pointing to a move to the downside, but then that momentum was not able to carry through. So we started seeing red volume decreasing and price going up, which means this could be a pullback or a reversal. So we would have to wait for the volume and the price to align basically again. And then we start seeing neutral volume, which basically shows that the market's not willing to go anywhere. It hasn't decided whether bulls are in charge or bears are in charge. So it's time to stay out. And if you see a chart that's showing this kind of behavior where price is moving in one direction and volume is moving in different direction, it's time to trade a different pair. Just move on to something that actually has the positive correlation where if the price is moving down, the volume should be red and it should be increasing. If the price is going up, the volume should be green and it should be increasing, which shows that there's continuation of trend. However, if you see volume that is red and the price is moving up, which is not a good sign, which at that point would mean that we could potentially see green volume come in, which means the price could start going up, and then it will be time to buy, but not right now. And if you just see white bars, which is neutral volume, that means we don't know at this point. The market is undecided. And as you can see, for 1, 2, 3, 4, 5 days here, price didn't really, the candles were very, very small. So the market was quite undecided as to where it was going to go. So this red candle is the first engulfing candle that we see in 1, 2, 3, 4, 5, 6 days. So this is the first engulfing strong candle that we see. And then we see, if you look down here, we see the volume is, the red volume is coming in and the price starts to move down. So this is usually what happens. So once you have a sideways market, price will, or the volume will reflect that. So we won't see any increasing volume. So let's take a look at a lower time frame, see if we can see this in an example here. So this is an example of, actually we can look at this one here as well. So here is a good example of a range-bound market. We have, so we had looked at that at the daily chart. Now we're looking at a 1-hour chart. So you can use this on different time frame depending on what kind of, whether you're trading short-term or long-term. You can look at this in different time frames and make decisions based on that. So if you take a look here, we see this nice buying volume come in here, and then the volume is not increasing and price starts moving down. So once you see this kind of behavior, price is starting to pull down, and even though the volume is green here, see how it's coming down. So we have a solid bar or a big bar, and then starts to come down. So this, when the price and volume do not align, it's time to stay out of the market. So this is usually a range-bound market when you see this type of price behavior. If you take a look here, even though volume is red, it's decreasing, which means the price, the chances of price moving lower are really low. Chances are it's just going to stay sideways. And if you look over here, even though buying volume has come in, but it's very, very small. And as you can look at the candles here, very, very small candles. So the first time you really see solid volume come in is at this candle. So you see red volume come in, and if red volume is followed by green volume, that's not a good time to be in the market. So you have to be careful if you have a trade in here. This is a nice reversal pattern here at the top of the range. Railroad tracks, good reversal pattern. But if you're not seeing volume that's confirming that, you have to be cautious in your trade. So you can still trade this, but be very cautious till you start seeing red volume. So once you start seeing red volume, that's a good sign, and the market is moving down, that's a good sign. But if your volume is decreasing, then you need to know that at some point the price is going to turn around because your volume is not supporting the price move. When the volume starts to die out of the market, usually it means that it's at the bottom, and then price could go up. But in terms of range-bound market, just wanted to show you this. Volume tends to be like this. So there's no clear direction in the volume. When you actually see a clear direction in volume, it should be increasing. The volume should be increasing with the price. All right, so in terms of a breakout, let's take a look here. So this is where the price breaks out of this range, and then it just trades sideways, which means it's not wanting to go anywhere. So we see the first time price really get out of this range, it just goes into a lower range here. So the first time we actually see price come out of the range is around here. So this is still neutral volume. So once you see price close outside the range here, and then you see price volume start to come in. So we see red volume, and then increase in volume. This is a good, this shows that you're in the right direction. So if you take a short trade here, just want to make sure you confirm with your volume to see that the volume is being supported. And then there's another indicator that I use here. It's called on balance volume, and we'll look more at what the indicator actually means. But as you see here, it's going down, right? So this is good. So when the price is coming down, this goes down, and your red volume starts coming in, which will show that you're moving in the right direction. Price wants to go lower, and typically price will go lower. So you want to see the on balance volume coming down, and then you want to see if you're going, it's a down move, you want to see more red candles. You don't want to see green candles. That's the biggest thing. So if you see green volume coming in, means it's buying volume and time to stay out of the market. So in terms of range bound market, to confirm a range breakout, make sure there's a close below the range. And then secondly, the volume is confirming that it should be increasing red volume. That supports here. So if you take a look here, every time the market stalls, the volume turns neutral here. So it turns white. This one is white. This candle is white. Look at the size of the candle. It's very small. This candle is white. And then we finally have red volume and increase in volume come in here. Then every time price goes sideways, you will see the volume turns neutral. So this is sideways again. So we have neutral volume, neutral volume, neutral volume. Then volume starts to increase. So every time you see increasing red volume and price moves lower, it's a good time to be in the trade. All right, so let's now take a look at a trending market. So this is what we normally want to trade. Range-bound markets, markets don't stay range-bound all the time. So how do we take advantage of the trends? We can look at volume to trade our trend as well. So let's take a look at what happens. So in terms of a trend, uptrend, we normally see higher highs and higher lows. So price will be moving in this type of a ladder, type of formation. So you see price move up, pull back, and then move up again. So it will break the high and then pull back, but it'll be higher than the low. So we have higher highs and higher lows, which is an uptrend. So in terms of our downtrend, we'll have a lower high and a lower low. So each time price pulls back, it doesn't break the previous high and stays lower. Every time it moves to the next level lower, it's usually lower than the previous low. So you will see price make lower high, lower low, lower high, lower low, and it will move in a stair-step type of formation to the downside. So this is our downtrend. Now, how do we trade that with our volume? Okay, so in terms, when there's a strong trend, volume will increase when the price is moving in the direction of the trend. And volume will decrease when the price is moving counter to the trend. So when there's a pullback, the volume will decrease, and when the trend continues, you will see that the buying volume will come in terms of an uptrend. And when the trend goes sideways, you'll see either neutral volume or decreasing volume. The bars will be shorter each time. So the greater the disparity in volume during trend and counter trend moves, the stronger the trend. So what that means is when the price is going up, we want to see our volume go up at the same time. So when the price is moving down, we want to see the volume to be lower. And each time it goes up, the volume needs to go up. And each time price pulls back, the volume needs to decrease. So if the price is doing one of these, that's a good sign. So you have large volume during pullback, smaller volume. Next move up, larger volume, price moves down, smaller volume. So when you see this type of scenario, that's a good sign. That means you're in the right side of the trend. So here we have an example. Each time, if you see when the price moves up, you see an increase in volume as well. As the price pulls back, the volume decreases. And this is what we're looking for. Every time the price moves back up, starts to trend up. You will see that the price here the volume goes up as well. And when the price moves down, the volume goes down. So this is usually what you're expecting to see. In this case, the trend is to the upside here. However, price never just moves in one direction. It always goes up and down, up and down. And this is the way to tell whether it's an uptrend, and if the uptrend is still staying in place and it's just a pullback, not an actual reversal. So in terms of just the pullbacks, in terms of trend, first of all, you'll see volume increasing and the price is going up. And in terms of pullback, you will see price moves down and volume moves down. And the next leg, you will see price move up and the volume go up. And in a pullback, you will see price coming down and volume will be decreasing. Even if it's buying volume, green volume will be decreasing, or you should have red volume coming down, which will be increasing. But if you don't get that, if you just see that the volume is decreasing, it's just a pullback. And when the trend continues, you will see again the volume going up. All right, so this is the general tendency that we see during this situation. So let's take a look at the charts once again here. Okay, so let's pick a different place in the chart here. So here we have, although this may not be the best example because we did have strange market conditions here leading up to the Brexit. So perhaps we should pick something that is here. We can take a look at this one here. This is a nice little trend. So here we have a trending market. We see price coming down, and then price drops, pulls back, and price drops again. So it's a nice trend. So the trend is to the downside. And if you take a look at its price is starting to make, this is a high, this is a low. So high, lower lows, lower highs, lower lows, lower highs. So price is kind of moving down like this. So this is a good downtrend. So let's take a look at the volume, corresponding volume. So as the trend first starts, you will see the trend is starting to go, the price is starting to go downwards here. And look at the volume here. So you see the volume is increasing here. So there's a slight increase in volume, although some of these candles don't have a lot of volume. In Asia, in Asian session, you will see, or between the two sessions, when the gap time when New York closes and Asian session opens, you will see that this kind of price candles where there's really nothing going on in the market, there's no market activity, and you will see that the price is really, the volume is really low at the bottom here. So this is, let's say you're in a trade and you start noticing that the market is just going like this, the candles are really, really small and the volume is really low. It's usually a good time to get out of the market because your trade is not going to go anywhere. And after that, it could go whichever way. We don't know but it's a good time to get out of the market. You're not really going to make any money because it's not going anywhere. Okay, so the trend starts, as we can see here, we had red volume come in and the price moved down, and these two bars, as you can see, this decreasing volume even though the price has gone up. So this is what I mean by a pullback. When the volume is decreasing, so forget the color of the volume for a second, just look at this volume. So this volume is high, and the bar is not so high over here, and the next bar is even smaller. This means it's a pullback. It's not an actual reversal. So we see nice candle close followed or corresponding with large volume bar, and then we see small candles and with decreasing volume. So this means this at this particular point in time is not a reversal, it's just a pullback. So if you're going long here, not a good idea because it is just a pullback, not an actual reversal. When we see price starting to trend, you will see the candles will start getting bigger in size. Here we are seeing small, 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 and then they start getting larger. As you can see, the red candles are starting to get larger. And if you look at your volume in the bottom here, you will see the bars are starting to go up here as well. And when you see this mess, when the price is trading sideways, you will see a lot of neutral volume here as well. Even though the candles are bigger here, but you'll see volume is neutral and it's starting to go down. Look at this, volume is decreasing and price is not really going anywhere. Once the price breaks through, you will see there is, once the price starts moving down, volume will start increasing here as well. So volume over here is much larger than volume right here. And you will also see, it will tell you the numerical volume as well, 270, will tell you what kind of volume is coming into the market. So when the price really starts moving, so your, this candle here is red, big red candle, you should see increase in volume in the bottom here as well. So here is your volume, it's at this level, and next candle has even larger volume, and the following candle has even larger volume. So you see the volume going up and price is coming down, which is great because this shows us that this is the right side of the market to be in. You want to be selling during this time, and as your volume shows, it should be selling. And when you look here in the green bars here, see how the volume is going down? So this shows that the market is about to turn. It's not going to continue, even though the bars are bullish, but the volume starts to decrease. So once you start seeing these candles here and decreasing volume, if you're long, it's time to get out. If you're not in a trade, it's time to start looking and waiting for a short trade. And you want to enter a trade when volume actually turns red. So at this candle here, volume turns red, and this is the time to actually take an entry, and then your volume is increasing. If you look over here, red volume is increasing and the price is coming down. So those are the scenarios you're looking for when the price is coming down and the red volume is increasing. And then you see this candle here. So this candle here with the long wick in the bottom with the green volume. So this would suggest that we are looking at a potential pullback coming up. So when you see a red candle like this, and with a wick on it, and you see buying volume, time to either close your trade or you want to manage it properly because you're looking for, at this particular point, you'll be looking for a pullback, which the pullback could turn into a reversal. So this is where you'll have to manage your trade, make sure you are paying attention to the volume. And then you see there's no follow through in the buying. As you can see here, there's red, green candle, and there's red candle here, and you have green bar, and you have next candle here is green, but there's red volume. So there's decreasing volume, which means price and volume are not agreeing that the market will go up, which usually means one of them will start to show the move first. And once we see this close, it closes below these, both of the lows here. This shows that the price wants to go lower because the price closes below the previous two candles. And as you can see, the volume starts to go up. So in terms of a trending market, you're looking for price. When the price is coming down, the volume should be increasing, the red volume should be increasing. And this is how you know that the price is wanting to continue up. Let's take a look at this one here. So here we see the price is just bottoming out, and then we see green volume come in. Here's your green volume, here's your bar, green bar. So once you have this, this is good because now we want to go move to the upside, and volume increases, and then volume starts to decrease, right? This is what we talked about pullbacks. In terms of pullback, if it's just a pullback, volume will decrease, but it doesn't turn red. So this shows us that this is just a pullback. The volume is still green, but it's decreasing, which will show us that there's a pullback. And once price starts moving up, volume starts moving up again. All right, so that's what you're looking for. Basically, price and volume should agree. When they're not agreeing, we need to be cautious. We need to look for pullbacks. And if the different color volume starts coming in, that means we are looking for a potential reversal. So let's take a look at what happens when reversals come in. So when the trend exhausts itself, you will see there'll be sharp price move, and it'll be followed with increase in volume. So this will signal that this is potentially the end of a trend, and So normally what happens during this time, price will move up really fast and volume spikes up as well. But then the next bar will be either a different color or neutral volume or decreasing volume, which means that there's no follow through. So if you see a sharp increase in volume, sharp increase in price, but no follow through, which means the volume starts to decrease, that means the market is getting exhausted. And when the market runs stops, you will see a sharp spike in the bars, but you will see that the volume has an increase. That's usually a telltale sign that there will be no follow through. And then the market will start going the other way. Usually there's an exhaustion of buyers, so there's no follow through. Same thing with when the market is bottoming out, there's a lack of sellers. It's just the last few sellers who stayed out of the market, and finally they decide, okay, it's time to sell, but the market starts to turn around at that point. And normally a decrease in volume will show that. So if you see the price is going down, but the volume is not increasing to the downside, it's a good time to go in the other direction. Okay, so let's take a look at reversal. So once the volume and price start disagreeing, usually it will suggest that either there's a pullback or reversal. So how do we know if it's going to be a reversal? Okay, so after a long price move higher or lower, if the price begins to range with little price movement and heavy volume, often it indicates reversal. So if the volume starts increasing and the price is not going anywhere, normally it will mean that the price will follow that. And we look for times when volume is decreasing at the same time that the trend is beginning to stall. So looking at this example here, if you see a market condition where you have, let's say, a resistance point, so the trend was up, so market was going up, and but as the price moves up, the volume starts to decrease. See how this becomes a range-bound market where the price is going up, but the volume is decreasing. Actually, this is a really, really good way to catch a reversal. If you see price is pushing up, but the volume is not pushing up, volume is pushing down, that is a good telltale sign that the market is about to turn around. As you can see, this price just continues to decline here, and finally price test this level 3-4 times, and then as we can see, the price is coming down, and as you can see, the volume starts to go up as well. And as the price exhausts, again, the volume decreases here. So that's what we're looking for, price to be pushing up, but the volume is decreasing. That means the price is likely to come down. So let's take a look at an example. Let's pick a different chart since we have killed this, or we've looked at it for a long time. So here is New Zealand. Maybe let's go backwards because the charts could be skewed. Actually, let's pull up a chart that actually moves. So we'll look at a euro US dollar because this pair tends to move quite a bit. So let's take a look here. I'm trying to go backwards because I'm trying to avoid this Brexit thing, and this is a 5-minute chart. Okay, so this is a good example here. Now, like I said, it works on all different time frames, depending on if you're trading short-term or long-term. So you can just look for corresponding volume on that time frame. So this is a 5-minute chart. Here, as we see, the price is coming down and then starts to become, as the price is coming down here, right here, as you can see, the volume is red and is good amount of volume. It's large bars here. And then as the price starts to pull back, you will see the volume starts to turn green. And then we see an increased volume, price hits a top here. So this right here, so 3 times price tries to break above here. But fails, and then as you can see in the bottom here, price larger volume starts to come in the market. So when you see price starts to decrease or price is not going anywhere and the volume starts to increase, this is a good sign that we're about to see the price go down. So if red volume starts increasing here, that means the market is likely to come down. If you see green volume, had the green volume started going up, we would have seen an increase or the price would have gone up. So that's what we're looking for. If you see green volume come in, but there's no follow through, we start seeing an increased red volume, which means the price is going to come down. So that's one of the signs we look for. And as you can see here, we see a lot of red volume, and then finally it starts to pick up. So here as the price moves, so every time there's green candles, the volume is either red or neutral. That means that the price is not willing to turn just yet. Price is, even though candles are green, the volume does not reflect that. So this would not be a good buying opportunity, even though it's sitting on a pivot point, which is important indicator for us, is not buying volume. So we should not be buying this market. We need to see some good follow through. So we don't get the follow through with the green here. We only see neutral volume. And then as you can see, price starts to move down, volume starts to increase. So this shows us that it's a trending market. The trend is increasing as shown by the volume, and the price goes down with it. And then finally, as the price starts to come down, as it moves lower, we see the volume starts to decrease here. This is a high volume bar, and then volume starts to decrease. And every time volume decreases, you will see that the price reflects that these candles are not very strong. It's gone from decreased in size, and then the volume shows that too. It turns neutral, and then we have a bit of a pullback, and then volume continues on. And as we see red volume comes in, the price starts to go down. So here is a very good trade example here. This is how you look for confluence. So we have S2 level here, and as you can see, price is coming down into this level. See how the candles are getting smaller and smaller, but the volume is not, volume stays the same. If anything, it's starting to decrease, go down. So when you see this, especially when you see small candles and you see volume that's not increasing or it's decreasing, this is when you look for reversals. This usually means that the price will start to reverse and or is likely to reverse. And if you look at this on balance volume here, this indicator, the price indicator is moving lower, which confirms a move to the downside. And here price, it starts to bottom out. Price is moving down and it starts to bottom out here. So one, we're looking at price action. The candles are getting smaller. We have an important support and resistance line here, S2. And then as we can see in volume, the volume starts to decrease here, and then it turns green. So this time, once this candle turns green, and as you can see, the volume starts to increase, we can actually buy into this move. And as you can see, we get the follow through here. Even though there's red candles, we see red volume, but it's decreasing. It's not big volume like this. So this would mean that price is not really willing to come down. And this is what we saw previously with the green volume. Even though we had some green candles, but the green volume wasn't going up. It was very, very, it stayed the same. So it was the same height, which would suggest that the price is not going to go up. And same thing here, even though there's red candles, the red volume is decreasing, or it's not as as much as this one here, which we should suggest that the price is not willing to come down, and we'd be looking for a price move to the upside. And as price goes up, we can see the volume is all green here, and every time it pulls back, volume comes back. Every time it goes up, volume goes up. So as long as the volume keeps going up, we are good. And then once we start seeing the volume decrease here, see how the volume is decreasing and the price is pulling back. So this is a pullback because the volume is still green. So once we start seeing red volume and red candles and the volume's decreasing, time to get out of this trade. So if you took this trade down here with an increase in green volume, this would be good confirmation to go long here. One, because the candles, the price action is showing us that the move is exhausting because candles are getting smaller, there's no follow through. Secondly, the volume is telling us that buyers have come into the market and it's increasing, which means we are looking for a reversal now. This is a sign that the reversal is about to happen. And as we see, every time price pulls back, it's a decreasing volume situation. The volume is not increasing. And as price starts going up, we see more green volume come in. And every time it pushes up, volume is up. Every time it pulls back, the volume goes down. So this is a good sign. So once you start seeing this kind of volume, it's a decrease in volume, that's the time to get out of this trade. Because at this point, we don't know where it's going to go. And if you're an intraday trader trading from a 5-minute chart, this would be a good time to get out because at the end of the day anyway. So market just goes sideways, and as the volume shows, the market is sideways. So any questions about this now? Anyone? In terms of how do we say if it's high volume, we take a look at this volume here, the 270 here, so that reflects the last volume of the candle. These bars will say how much the volume is, but in terms of above what level is it high volume, the volume is relative to the previous bars. It's not yeah, it doesn't, it's not like RSI where it says above this level it's higher, down below this level it's low, because here is low volume but it's really, really low, right? It really depends on the market activity, so it's hard to say which one's it's relative to the previous one. Okay. Sounds good. So let's talk a bit about the indicators that you can use for this. I myself use two different indicators. One's called the Hawkeye volume. So the Hawkeye volume, oh, that's not the right one. Looks like I got both of them mixed up here. So Hawkeye volume is the indicator that I use. This is the Hawkeye volume indicator. It's not my indicator. It's just somebody else who has created this indicator. I personally like this one. So I've chosen to use this one. It's not that expensive, it's just $99 or something. But I find it's really effective because things that I like about this indicator are, one, it tells you volume, whether it's buying volume or selling volume. So if you look at this, FXCM has an indicator as well. I'm with FXCM. So they have their own indicator. The problem with this indicator is that volume is all blue. It doesn't tell us where, if it's buying or selling volume. It just tells us whether it's increasing or decreasing, but it doesn't tell us whether it's buying or selling volume. So I like that visual representation of whether it's buying or selling volume or neutral volume, because it helps us with trading. If you see price coming down and volume is increasing, perfect, you're on the right side of the trade. If you see price going up and the volume is increasing, you're on the right side of the trade. That's what I like to see. I use it as confirmation tool. I like to trade price action, so this is a good confirmation tool with the price action, just confirming the price action. And you will see the other tool that I use is the on balance volume here. And on balance volume is basically what on balance volume does is it just keeps a running total of the volume. So what it does is, as the price is moving, it keeps adding the volume or subtracting the volume from the previous bar. So let's say if we started with the volume of 10 and next time more volume came into the market, it will add that, and then the volume decreased, it will add that as well. So basically what we are left with is the volume, if it's high and the price is moving high as well, it will show that. But when there's a divergence, that's a good time to trade as well. If volume is, if the on-balance volume and Hawkeye volume are diverging, that's a good, that's usually shows that it's going to move down. So here's how I use it, for example, right? So we have right here, so we have price moving up, green volume is moving up, everything's aligned. This is good, perfect. We want things to be aligned. And as we see pullbacks, like we talked about, volume starts to decrease, but it still stays green, which means we should stay in our trade. And then we go back, and then finally see how the volume, it's a green bar, green pin bar, and red volume comes in. This, and then we have all kinds of red and green volume here, and the price is not going anywhere, right? So this is where how we know that market could potentially turn, because as you see, price starts to go down and the volume is decreasing here, and then we see red volume come in, and then there's follow through with red volume. This shows that the price will come down. So with the on-balance volume, the way you confirm with on-balance volume is you want your volume, on-balance volume, which is to be going up as the trade is going up or the price is going up. And when the price is coming down, you want your on-balance volume to be coming down. So here we have price is struggling at the top, right? And on, as you see here, volume is struggling as well. It's decreasing. So this will be a good indicator that the price will is likely to turn. So when we see this red volume bar and a corresponding red engulfing candle, this is a good time to take a short trade with your stop above here, above the pins. You're looking for a pullback and you're looking to sell. And as the market, the volume goes up here, you stay with the trade, and when volume starts turning neutral or it starts decreasing, and we can get rid of the trade. So this is on balance volume should correspond with what's going on with price and this volume. Once there's a disparity, that means see how this here is a good example of disparity. So here we have on balance volume is sitting up there, and the price is moving up, and the volume here is decreasing, right? So this here, when on balance volume is sitting high, I will not sell. You don't want to sell when on balance volume is sitting high and the other volume is decreasing. Even though the volume is decreasing, on balance volume is not. So normally if you see market that closes like this, you can see this, right? Because what happens here is on balance volume did not come down. So if you're looking for a reversal and your on balance volume does not come down, that's not a good sign. That means price could still go up. And we see this a lot of times in the Asian trading, with the session towards the session end, the volume drops just in general because there aren't that many players left in the market. People are going home and whatnot. So you'll see the volume has decreased, but your on balance volume is sitting up high. That means we still have more up move left in the market. When your price starts coming down, you want to see your on balance volume coming down. And as the price is moving up, the on balance volume is moving up. But if price starts moving down and on balance volume is really just sitting up here and it doesn't really move substantially, see how it closes up. That's usually a sign that it's going to push up. See how every time price goes up, on balance volume is going up. If you see a disparity where on balance volume is coming down and the price is still pushing higher, chances are price is going to turn around. So that's how I use it. On balance volume here is a free indicator. So if you just go insert indicators, you will see under volume, you will see on balance volume here. So that's what I use. I have tried this free volume thing that comes with it, but I find I don't like it. This one here, this indicator comes with MT4. I personally don't like it. It's just, you could try it, but I'm not sure how good it is. I just maybe you could change the colors and stuff and make it look the same. I have found that the Hawkeye one I like better just because you can read on their website. I find they do a better job of actually doing the volume. They have this algorithm that they run. It does, I don't know, thousands of 360 calculations and whatnot. This indicator also comes with this other graph or other template that I don't always use. So if you go insert indicators, I have volume, no, not volume, custom. And if you look at Hawkeye here, so you have Hawkeye volume. They have all kinds, like it comes with, I didn't do anything. But anyways, the Hawkeye indicator comes with the template, and they have some things that tell you where the market's going to go next. But I just use this. I use the volume indicator and just the volume. I don't like the arrows and everything else because I don't personally, I like just seeing the price. So this I find is a good complement to the price. So it doesn't keep me from seeing the price. I like to be able to see what the price is doing, and just the volume helps with confirming the move, as opposed to, sometimes you think it's a pullback and it may actually be a reversal. So you don't want to sit in your trade and give away your profits. So if you wanted to buy this indicator, I think I may be I think I am affiliate with them. If you want to buy through my website, I would appreciate that if you do want it. But you can try the default one that you get with MT4. If you do want to buy it, go to my website, tradingwithvenus.com. Under resources, I think there should be, Hawkeye. This will take you to their starter package, which is basically gives you the volume indicator, volume paint bar, volume radar, pivot points, and white bar. I don't use any of these other things. I just use the volume. So, but you get few extra things with it if you wanted to. If you click on this link, if it's an affiliate link, it will take you to their website. I think I get like 15% commission or something. So not a big deal. If you just want to go directly here, you're welcome to go do that. So this is the website. It tells you about the volume indicator, what you get, and how this works. This is the template that they have. It basically shows you where the different, it kind of paints this thing which tells you that price is going up and all of that. So you can of course, when you get it, you can try this. I just don't like my charts to look like that, so I don't usually do that, but this works on more than just thank you. So this works on more than, actually volume is a really good indicator if you're trading, let's say you're trading more than just Forex. If you're trading futures, options, or stocks even, this is a good, volume is a good indicator because they have true volume during that. So it's a good, good indicator to use. And of course, if you wanted to buy my course, if you want to see how I trade some of my trading strategies, and I also talk in great depth about price action, which is my bread and butter, you can check out my course, tradingwithvenus.com/Forex course. You're welcome to check it out. And if you have any questions for me, feel free to send me an email, or on the website, you have the link as well. Can I talk about the trade room? Yes, absolutely. I have recently started a trade room, which I run from Tuesday. So it runs on Tuesday, Wednesday, Thursday, 3 days a week. I show you what trades I'm taking in the market. So basically we look at charts like this, and I will tell you where I'm entering the trade, where my take profit is, where my stop loss is going to be, and how basically you can see how I trade, what trades I'm taking. And of course you can choose to do the trades or not do the trades. That's up to you. I don't provide advice, but I'll show you what trades that I'm taking. And if you're not able to attend the trade room itself, I do a video analysis every night. So you may have seen my weekly analysis videos come out, which I send to everybody. But if you're part of the trade room, you also get the daily analysis. So let's say you are going to trade the London session, for example, you will have the analysis delivered to your email prior to the London Open. I usually do it at night before London Open, so it's very relevant, works out really well. Or if you're trading the New York session, the trade room starts at 9 a.m., but if you wanted to trade sooner than that, or 9 a.m., sorry, 9 a.m. Eastern, if you wanted to trade the Open, for example, if you want to trade at 6 o'clock, you still have the analysis with you, so you can take those trades even if you're not able to physically be in the trade room, so you'll get that as well as part of the trade room. And to access the trade room, you can just go to here, Trading with Venus, and Work with Me area. It will tell you everything about the trade room here. So here's the information on the trade room. So you get a weekly market overview video, you get daily analysis video, you get live market analysis and trading with me. And then you get to see my trade setups where I'm taking trades and how I'm managing them. And you also, I give you my pivot point indicator because it's one of the indicators that I use quite heavily. So you get that as well. And then you get access to like trade examples and trade setups that I come across that I capture. So you get all of that. Any other question before we wrap it up? Okay, perfect. So we will call that a wrap. If you have any questions for me, please feel free to email me or call me. You guys should have access to my phone number. Feel free to give me a call if you have any questions, or if you wanted to talk to me and see if it's a right fit for you. You can always, there's a link here. You can book an appointment with me. We can have a chat as well. So that's it for now. You guys have a great rest of the weekend. I will see you next time then.